You are in the right place, and we're pleased to have you here today. This is the second of our roundtables this year, and just to kind of recap, we're doing these regular roundtables with the idea of providing 30 minutes of just highly impactful information for notaries. And the topics that we cover on these are things around growing your business, expanding your skills, or in some cases, just making work and life a little bit better. And we thought today would be a great opportunity. We're right in the midst of tax season with the April 18th tax deadline coming up. And we're very grateful that we've got a couple of wonderful guest speakers, experts in all things notary and tax, who are on today. And they're going to talk to us a little bit about just, how to manage your taxes as a notary, to make that a more profitable area for you, and so forth. So what we'd love to hear from all of you on is in terms of our chat. If you will introduce yourselves, I think other people can see you. We also may be asking a few questions, and we urge you to input your questions on chat so that we can ask our panelists those questions. So on camera. All right, good to see you guys. This is awesome.
Yeah.
So we have Donna and Glenn LeGault. Am I saying that correctly,
Yes.
guys?
Yes,
Yep.
correct.
And
Yep.
they are the founders and operators of LeGault Financial Services. We'll get into a little bit of detail about what you guys do shortly. Your website is here, and urge everybody who's online to take a look at what your offering is. It's very interesting.
Yes.
So I'm going to stop sharing my presentation while we just have a talk a little bit about this important topic. But just kind of getting warmed up, you guys are pretty unique. You do notaries and you do financial teaching and CPA work, bookkeeping and accounting and taxes.
Correct.
And
Yep.
can you tell us a little bit about yourselves and how you ended up in this interesting intersection of two things that are important to all the people on the call?
Well, actually, what it is that I kind of married into the business. I had actually worked for Boeing for about 23 years before getting laid off about 8 years ago. I helped Glenn as a part-time.
Yeah.
I took on a full-time position in LFS, as actually my experiences with working with some of the high managers at Boeing. I was able to slip into this position as operations manager, basically running the office part of the company. What it is that Glenn is a certified public accountant, certified financial examiner. He does all the actual work itself.
Okay.
And just by kind of coincidence, a couple of our clients said, "Hey, do you guys notarize?" And we said no, but since a lot of customers inquired, we're like, "Hey, we should check into this." So
Nice.
we got our notary certifications through the Commonwealth of Pennsylvania. And just kind of doing some research and digging, here I come and find Notary2Pro offering loan signings. It's like, hey, that would be a great add to the pot, especially when there's a lot of financial relationship to it. So
Sure.
That's how we kind of came 6 years ago, taking the course. Basically whatever you guys had offered, that's what we had taken.
Oh, okay.
And currently we are Notary2Pro graduates, experts in notary and loan signing. So I'll pass it over to give his background.
The way we kind of got involved in everything was that a long time ago, I had some tax background with a company that I was dealing with, and was ordering the returns, doing the corporate taxes, everything like that. So I got familiar with that aspect of it. And as part of that, I was doing a little payroll, understanding the payroll aspects of a company and how to set it up and look at the incorporation. So a lot of stuff I learned in the past, and I kind of just kept growing on it and doing different things. And a lot of our clients, they became like family. So we have second and third generation clients. And it got to the point where as soon as they got a letter that had some kind of regulations on it or code, they gave it to us to do.
Nice.
Kind of by default became like the family accountant. You know, some people have like family attorneys. We became like the family tax service accountant. You know, for the businesses, we did the same thing. We kind of took them on, taught them how to run the business, how to do QuickBooks, how to properly manage the funds, stuff like that. So
Great.
Really got narrow. We're pretty much wide, just from the background and our clients' excellence to do a lot of diverse items.
A lot of diverse items. So you're doing some training too, right?
Yes.
And training around what area?
Bookkeeping, payroll, tax. We pretty much will train anybody, do anything we feel that it's a learnable skill anybody can do. It has to be CPA, but you can learn bookkeeping for your business. So we try to teach our clients, tell them, like, if you want to do this, not a problem, because just put money in your pocket.
Yeah.
You save money and you keep more money to the bottom line to yourself.
Okay.
And we're willing to teach, and we'll teach anything you want, whether it's the payroll aspect of it, the bookkeeping, you know, tax services, tax, we'll teach you.
Nice.
Some
Nice.
when they start learning what you have to do with it, they kind of really off quick. But other clients,
And you're both doing notaries as well?
yes.
Yeah. Our business our experience has actually kind of gone somewhat international too.
Really?
We've had a few of our clients who have actually like lived here in the United States. Is that they still had ties to the United States in the sense of having to still file taxes and stuff. And they've actually moved to another country. So they stay in contact because of today's technology with like Zoom, stuff that we can do. We have actually had, been able to do some international finances too. I think one of our clients, like for example, his mother lived in, what was it, Netherlands? Norway.
Yeah.
And the mother passed away, and he's like, well, I have some financial questions I need help with. So he inquired our Glenn's assistance and we helped him out.
Nice.
So,
that's very exciting, isn't it? To have clients from all over the world.
It is.
That's
different tax structure, and it's different, interesting tax systems between the rest of the world and the US. We're very different compared to the rest of the world. There's,
Yeah, that's something I actually have a background in. I spent a long time in an area called global mobility, but that's a whole other story. So taxes all over the world. But Donna, you said you married into this. Are you guys married, what, 8 years?
12.
Oh, 12 years. Okay,
yeah, 12
congratulations.
Years. Thank you.
So I have one question. Who's the boss?
I just do the work. She makes the money. I just do the work. And she tells me where to go, what customers see, and I do it. That's about it.
Yes, but on a business line, we basically have both learned that we each have our specialties. Because like, for example, don't ever ask him to schedule my appointments, because there was one time I was sick with the flu and he tried to, and he kind of double dipped the client. So I had to call him back. So we've learned our specialties of what we do. That's why I said I run the office and he does actual work. So because of that,
a great partnership.
Exactly. We don't really overlap a lot on
Wonderful.
duties.
Exactly.
Great. I'm going to kind of shift gears and dip right into sort of some things that are critical for notaries. So if I put you on the spot, just let me know, but I'm positive you have the expertise for all this stuff. One of the things that I think are very concerning to notaries is when we look around this season of the year where we're trying to figure out taxes, right? The question comes up how to handle reporting of notary fees and gross income, and you're very familiar with that. Could you talk a little bit about that for our audience?
Yeah, actually, it's interesting because when you own your own business, normally you pay self-employment tax on your income. What it is, and the big key is that when IRS looks at us as agents of the state, in a sense, we are public service. So we are public servants, even though you never civil service, you are technically, in the eyes of the IRS, a public servant doing public work. Therefore, since it's public work, you do not pay self-employment tax on the actual notary fee. You pay self-employment tax on everything else. So the big thing is when it comes to loan signing, because obviously when you get a good loan signing, if you get a good fee, it might be $150 for the signing, but it might be only like 10 notarial acts in it, let's say. With Pennsylvania only allows you to charge $5 for a signature and $5 for an oath. So if there's 10 notarial acts in the document, that's a $50 income for notarial acts. The other 100 is for the service of going and doing the loan signing. So you want to make sure you separate that income out somehow in your system. You put the $100 as non-notary fees and $50 for notary fees. So when the person does a tax return, if you have an accountant, you use us, we know that, okay, this $50 is not for the self-employment tax of 15%. It's just for the income piece. And this other stuff is for both sides. So that's one big thing that you want to definitely separate in your book so you don't overpay taxes.
Right.
If you do that, the CPA is not going to know that, and he's going to think it's all self-employment unless he's a notary himself and is well versed in that aspect of income.
Okay. So the notaries, when they're reporting their gross income on their business, they're pulling that out typically, or do banks and lending signing agencies typically report the difference?
They won't report the difference because they don't know what it is that each state's different. So that's the federal, and you have to look at each state level. Each state has different tax laws.
Got it.
Most likely they're not going to be with it. They don't know what document is, so they do not know how many tracks you did. So it would be very time consuming, very hard for them to truly track. And they're going to just give you one check. Then it's going to be up to you to split it in your books.
Okay. So it's very important for notaries to track that from the very beginning then. What part of their fees are notarial fees and what are kind of service fees then?
Correct. You know, like if you do a traveling fee, if you do mobile traveling fee, that's self-employment tax. So the best thing would be to do, if you're doing a signing, let's say, get an Excel, get like maybe a little notepad or something, and maybe as you're doing sign, kind of look, review the documents before you go to signing and count how many notarial acts is going to be in the document and mark that in kind of like a ledger maybe. So you know that, okay, date, the signing, notary fees times wherever the state says I'm allowed to charge.
Yeah.
Then you know that amount and maybe run a separate ledger on that. You just add up your ledger, you know, okay, I did 100 signings, $50 where I signed up $5,000 of all my income that I get with the 1099s I get to represent income. I have 5,000 notarial acts, so therefore will not include that. I'll include on Schedule C if you're so prior, but I won't include it on the Schedule SC, which is the self-employment one.
Got it. Okay. So what happens if a notary has not tracked these from the beginning? Do they need to go back and reconstruct that? It could be a sizable amount of money, correct?
And correct, that could run. So it depends on if you go to a CPA, this is not responsible for your records. You are.
Right.
Whatever you present to a CPA at the time of doing the work, they're going to go on what you have. Tell a CPA you do notarial acts and you hand a number saying I had 100,000 gross income. It's not our responsibility, unless it's really wacky, to determine how to run your books, unless you hire us to do that aspect of it. So to us, we're a properly presented document. On its face, it looks correct. We will file that return as all Schedule C income, employment income. if you tell us, as long as you tell us ahead of time, then we could sit down and figure out what to do. But now it could get very expensive to your bottom line in fees if you have us do it, and we're spending hours and hours and hours and hours just trying to reconstruct
Right.
the record. So it's very important that you keep accurate and tight records, so you have a low tax bill when a CPA does your return, and it's very accurate and complete.
Right. Easier to just hand it all over to somebody like you to do, or if you're self-filing yourself, to be able to know how to differentiate those things from the
Definitely.
beginning.
And
Right.
you know, we always, and that's one aspect of teaching. We'll teach someone, we'll sit down
Yeah.
on any level. So if you want us to help them complete it, we just help them and answer their questions and guide them a little in some direction if they want to see something do on their own. You know, we don't mind doing that.
So Glenn, one of the complications for a lot of people as new notaries is they're new to self-employment, right? So
Yeah.
what are some of the deductions or the things that people who are self-employed like notaries should really, or especially notaries, should be looking for, and that you help people obtain?
Car expenses, that's huge.
The car expenses.
Car expenses is very useful. You're doing a lot of mileage. You know, if you have a good day, you're going to be printing stuff out in your home office, and you're going to be driving to all these places. And it can, you know, especially if you do mobile notary, where you drive to clients' houses, it's up a lot. And a lot of people don't understand that you have to keep meticulous records of those transactions, not estimating. That's the biggest thing. People think, oh, I'll wait till the end of the year, I'll go CPA and he'll ask me and I'll guess my number. I'll say 50% business travel. That, if you get audited, it gets you in very big trouble. Does not accept estimates.
So if you go back in and Google the distance, that's not acceptable.
That is acceptable.
Oh, it is. Okay.
Oh yeah, I did people that, like, in other words, you never have any records. In other words, you just don't have any records. They just, yeah, it's about 40% business use. The problem is if you don't have documentation to prove that, that's where you get into trouble.
Right.
So what you have to do is you're allowed to take actual expenses, because I did see someone's claim about gas and mileage.
Yeah.
What it is if you take gas, you can't take the standard mileage. There's actually the standard mileage deduction, which you track the mileage you use for business. You don't have to worry about actual cost, or the actual expense method. So what we always tell our clients is that you can switch between both methods each year. So we tell our clients, keep odometer readings every day, and the beginning odometer, ending odometer, and whether that's personal and business. That's the documentation IRS is looking for. Substantiating your numbers. If you do not have that method, and you use Google, like you said, Michael, that's a perfect acceptable substitution for documentation.
Oh, good.
The one thing that will hurt you with that is that if you just do that for your trips, you do not know the percentage of use of your car, because you're not tracking the non-business mileage. So let's do that. That'll probably get you the standard mileage, and that's what CPA would use to determine the business cost. But you could be losing out a lot of money if you do it that way. Standard mileage.
But with the right information, Glenn, a CPA like yourself can say, if we calculate actual costs of the vehicle and mileage, it'll be X, and based on a mileage amount, which, how much is the mileage now?
I think it's like 58 cents a mile.
58 cents a mile. Should be higher now that gas prices are up at, next thing you know, $12 a gallon or something.
Oh, I know.
crazy.
I know. We're about 4, and I think California is 6 or 7.
Yeah.
Probably what you guys are up to.
So they can make a decision at that point which direction to go. But you can't do gas and mileage. You can't do car insurance and mileage, right?
No, you gotta do one or the
other.
other. That's the key. And the other big thing that people really don't track is home office deduction.
Okay.
Another big one that people don't, it's a lot of work, it's a lot of time. Those two areas, the car and the home office deductions, where your record keeping has to be on the point, has to be accurate. Right. And what that is a home office deduction is that a lot of small businesses, they don't have rental space because
Mhm.
too much. So you're allowed to use your home as an office, but it has to be exclusively used for the business. And then you have to then you have to get the square mileage. So if your office is 200 square feet and your home is 2,000 square feet,
Mhm.
and percent of utilities, mortgage interest, homeowners insurance, taxes, all that is an actual business expense, utilities, but you have to keep track of the records,
Uh-huh.
especially utilities, because that is a monthly fee. So you got to, make sure you keep track of that, add it up, keep a ledger on it.
Right.
Other things is
Now, Glenn, can I ask you a question? A lot
Yes.
of people are reluctant to claim a home office deduction because we hear so much about, that being an audit trigger, or it's dangerous somehow to claim that because they're afraid of getting audited. Is there any accuracy in that?
that, no, because the IRS requires under code that every dollar you put on the return, you have proper quantifiable supportive documentation of the number.
Okay.
So what people say that is because what they do is they do not have that documentation required by law, and they just run numbers and they figure out what they think it is. Then we get audited and the IRS says, okay, I just need your PICO bills for the 12 months. And you tell me they were a total of $5,000.
Okay.
Person now suddenly has to produce PICO bills and they're only $200 a month. Now they're in trouble because they lied or overreported the income.
Mhm.
Almost deduction. Now you got to explain how that happened.
Right. So
People
you
say that.
So it's okay to do it, just do it the right
Yeah,
way.
100%, yeah.
Okay.
Business, good.
Real quick, there was a question. You've got it, Donna. Yes, you
answered.
can't. The question came up
Yeah.
about
Yes, you can.
an appointment or dropping off at FedEx. Those are business miles, right?
Yes.
Yes.
What it is that since you're
I'd love to hear from the audience, by the way. Does anyone use a mileage tracking app on their phone? If anybody has a favorite, chat it out to us and we'll share with everybody. There's some great mileage tracking apps out there now.
what it is that I'm glad you brought that up because that's the point. Remember, if you do not have an office, your home is the office. So if your home is your office, there's no commuting miles to your office because you're
Mhm.
at the office 24/7. As soon as you leave your home to go to any place, whether that's to go Staples and pick up ink, whether you go to post office to pick up stamps, that's all business mileage because you're working for the business.
Mhm. Okay, makes a lot of sense.
Yeah.
I know we're going. This is such a long topic. We could probably do an hour on it. But
Yeah.
how about other deductions that you most commonly see? I'm assuming office supplies.
Office supplies. If you have any kind of loan for the business, the interest, you take off that. Telephone, cell phone, internet. If you have services that you pay to fax stuff, that comes off on it. What the IRS considers expenses, anything ordinary necessary to run the business. So, and most of the people doing notaries, ordinary would be like, the pens, pencils, ink, paper, ink cartridges, a printer, yes, a chair.
Continuing education.
Mhm.
Yeah, continuing education. So for notaries who are taking classes or seminars,
Or
does
membership.
the travel to and from the seminar count?
Yep.
Mhm.
So it's all something that becomes deductible as a business expense.
If there is a conference that you're going to go to, let's say in another state, let's say you're going to fly, you're going to run a car, hotel, food, is food?
Yep, food's
Food.
50%.
Anything that is used in relationship to that business, it can be taken off.
Now, did something change with tax reform around entertainment?
Yeah, that's out.
What's that?
Entertainment got knocked out with Trump in 2017. So It still says meals and entertainment as a category, but entertainment is not allowed anymore, just the meals.
Just the meals.
Yeah, the
So if
category.
I
is
take
still-
my favorite title officer to lunch, is that okay?
That counts. It's more of the golf tournament
Oh,
concerts that knocked out. That
mhm.
but there is no food aspect of business meeting.
Okay.
So that's so if you take a client out to play around the golf, the
Mhm.
cost of the golf don't count. But after that, you sit down at the country club and have lunch at the country club, the food counts.
Okay.
Here's one question. How much of your cell phone can you claim?
If with the cell phone, you would have to technically break it out per phone call and see which is business, personal. If you just use your phone, you put it all on, they're not going to say nothing. That's not really a worry point.
What if it's
Mhm.
and with other, let's say, family members?
If it's a plan with other family members, just what we normally do is just take the bill, divide it by the number of lines,
Mhm.
and divide it that way. The IRS doesn't need you to do a scientific 500-pound study. They look for reasonableness. So think about something that seems reasonable and logical. Keep those records documented and you'll be fine.
Here's another question.
Hey, we have a
So-
couple more. Go ahead, Donna.
I'm sorry, Barb.
No, we just have a couple more questions. So if you,
I'm going down there. I
Right.
think here's one that's worth
Right.
definitely calculating the percentage of your office.
Yeah, so what that is, it's the square footage of your office divided by 12 square footage, it's total square feet of the home.
Why don't you give an example?
So if your office is 200 square feet, your total house is 2,000, then that's 10% of your house.
Okay. And all of the home expenses go into that. I realize this is like a lightning round, but what we want to leave everybody with is some food for thought. We're going to do a follow-up article so people have a reference to
yeah.
this. And I would also urge any of our audience to reach out to you if they'd like some mentoring or
Yeah.
training in this area, because I think it's very
Do you have time
valuable to pursue
Do we have
that.
time for one more question?
Sure, yeah.
Public transportation, yes, that counts. So does ride sharing. So if you pay to do ride sharing accounts, one thing, too, real quick, training, if you do any training for the business, it's business expense, but also you get the lifetime learning credit. So some expenses turn into credits on the personal, or you actually get some credits. So that's one thing too. That's why I don't keep good records, because the CPA can look at stuff and figure out where to get more money back,
Mhm.
get to do a better return for a better bottom line for you guys.
So Glenn, is that your number one recommendation? Keep good records?
Yeah.
How about another one? Is there another favorite piece of advice for
Could-
folks?
Yeah, could keep records, and there's a lot of choices. Remember, the IRS has multiple laws and regulations. We can do things differently.
Mhm.
Always think about what you do and write notes about what's going on with your business and your personal life. Because if you don't, the CPA doesn't know what happened in your life, we can't figure out the best deduction or the best return for you. So
Nice. Yeah.
yeah, if you think of ideas, write them down and then organize them, and also keep in contact with your CPA quarterly, just to make sure you're not missing nothing.
Mhm.
Do checkups. We do quarterly analytics for our clients to determine if they got past any taxes, where they stand.
Mhm.
And also, look at the bottom line, see how much money you're making and see what you got to do. Keep good bank rec, do the bank rec. Always do bank reconciliation as a control. So you know where the money is, where it's going, and where you're spending money on.
Okay.
We do have one question here about, do we offer a webinar to keep good records?
We could definitely do another one with you guys, Mike.
Yeah.
So if you want to set up
Yeah,
another,
we'd love to do that. And
can hop
we
in
offer
and-
some course content on that, but we will definitely, just for the audience, we so appreciate your patience. We got a little bit of a late start, so we carried it a little late today. There's a lot of good stuff here, and I think we should do a couple of follow-ups. We're definitely going to do an article for everybody so that you have some reading material to follow up on. And we also just so appreciate Donna, you and Glenn joining us and providing such good advice for everybody. We'll definitely need to schedule at least one follow-up for everybody.
Yeah.
And I'm going to put your, while we say goodbye, I'm going to put your contact details up on the screen again, so everybody has access to your website.
Yeah.
And of course, you can go to Notary2Pro.com, and we have the content and other materials that are out there and will be out there. So we look forward to
Real quicker.
talking with you guys again.
Real quick, one last question is real quick.
Sure.
If you started the business, whether you have income or not, when the first day you start your business, that's when business starts. So just because you did not have no income in that year, you still record a loss for the business. So you still report the expenses, and then you have a loss until next year when you actually income. So it's when you start the business, that's when you make income. It's when you start business, when you start filing business tax returns. Not when you start making money, it's when you start the business.
So people can worry about a loss in the following year. Is that what?
Well, now the one gentleman, one person
was
saying,
asking a question.
as I started my business, I didn't have any income. What do I do with the expenses? Don't report the expenses. So if you start your business January 1st, July 1st, and
Mhm.
your business December 1st, you still have expenses. So you still file a return and you follow those expenses, increase the loss that year on the return, but you don't wait until next year. You just, follow the return with the expenses, and it's just a loss.
Okay.
Yeah,
All right.
so I want to get that last question answered.
Yeah, that's great information. So you guys, thank you so much for
No problem.
taking time
you're
out of what I
welcome.
know is a busy season for you to join us
Yeah.
and
No
for talking to our
problem.
audience.
Our pleasure. Everybody have a great night.
Okay, take care.
Bye.
Bye
Take care.
now.
Bye-bye.
Hello, I'm Michael Ray, CEO of Notary2Pro. Thanks for joining us for this webinar. Be sure to see our website, Notary2Pro.com, for more information and resources. Also, don't forget to sign up with us there for great additional updates, news, and tools. Notary2Pro is the most respected professional signing agent course in the United States. Founded by Carol Ray in 2009, Notary2Pro has trained more than 10,000 notaries to become professional signing agents. Our graduates are preferred by more signing agencies because only Notary2Pro enables notaries to practice error-free signings. Thanks again, and see you next time.